So good morning. My name is Jim McDonald with Torrey Hills Capital, and pleased to be hosting today's call featuring Cosa Resources, a uranium exploration company with approximately 237,000 hectares across multiple 100% owned and Cosa operated JV projects in the Athabasca Basin, all of which are underexplored and the majority of which are within or adjacent to established uranium corridors. Just recently, in November of 2024, the company entered into a strategic and transformative JV agreement with Denison Mines on three uranium exploration projects, additional details of which will be discussed in greater detail over the next 57 minutes or so. As you can see here on the screen, the company trades on the OTCQB under the ticker symbol COSAF and also on the TSX Venture under the ticker symbol COSA. And joining me today from the company, I've got Keith Bodnarchuk, the company's president and CEO. Before turning the call over to Keith, just want to go through logistics fairly quickly. Nothing new here for people who have been on calls with me in the past, but just a reminder that our webinars are intended to replicate our in-person meetings, which we like and encourage to be as interactive as possible. With that in mind, if you have questions along the way, please feel free to ask them. The best way to do so is use the navigation pane at the bottom of the screen, click on the Q&A button, type in your question, we'll get those presented. Alternatively, if you want to speak to Keith at any point during the call, we welcome and allow that as well. The only way to do that is, again, use the navigation pane, click on the raise hand button. We'll see that and be able to unmute your microphone and allow for direct conversation back and forth. As with all the calls, I will remain on throughout, monitoring questions as they come in, but will remove myself from both video and audio so as not to be a distraction. And with that, let's turn everything over to Keith and hear more about these transformative acquisitions that just happened.
Thanks, Jim. Great to be back on here. And yes, truly a transformative time for our company. I'll just share my screen here. Okay. Everything good, Jim, as far as seeing the screen?
Yep, all good.
Okay.
Thanks.
Sounds good. Yeah, so I'm Keith Bodnarchuk, CEO of Cosa Resources. We are a uranium exploration company with assets in Canada. We are a newer story, but we're led by a team with really a track record of making discoveries, and really unlocking a lot of value for shareholders at previous companies we worked at, which I'll touch on in a little bit. I will be making some forward-looking statements. This is available on our website, so I encourage you to review it. So a little bit on the uranium market itself. So just as a reminder to people, uranium is the largest use of uranium is for nuclear power. The United States is the largest user of uranium in the world. They have the most nuclear power plants in the world. The largest producer currently of uranium in the world is Kazakhstan. And what you've been seeing over the past, if you've been following the past few years, is that the uranium price has started to trickle back up. And so this really goes back to Fukushima. We had the tsunami that hit Japan. It hit a nuclear power plant, and what happened was that the price of uranium fell down, right? You had Germany closing plants, you had Japan shutting down their plants temporarily, and what you entered into was quite a dark day in uranium and nuclear power. But what really kept happening in the background is a lot of jurisdictions like China, India, groups like that kept building nuclear reactors. And so that brought us to about 4 years ago, when actually demand for uranium surpassed that of what it was pre that tsunami in Japan, but yet the price remained down. The price remained low. And so what experts started to realize was that, okay, there's a big gap here in demand with what's happening from supply side. And that's why you saw the price slowly start to react. And really it was this past 12 months, like last year, where you saw the spot price of uranium go back up over 100. For context, it was down to $18 a pound post Fukushima. And so what you're seeing now is what we're entering is unprecedented demand for uranium. And something to understand too is that in the uranium market, there's something called the spot price, which represents about 10% of the amount of uranium that's bought. And then there's something called the term price. This is longer term contracts. This is what's really signed by the producers, with the end user being the power companies, the utilities that need it for nuclear power. And so that represents about 90% of the market. Unfortunately, with the spot price, it is wild. It's one of those ones that It has a lot of financial players in it, people that are just trading physical uranium. It's not really providing uranium for nuclear power plants. It's mostly, like I said, financial players trading it back and forth. So it does have kind of wild fluctuations in price, and equities are somewhat tied to it. And so what you've seen recently, is that the spot price shot up to just over $100 a pound. Over the past 12 months, has kind of settled down at 70 pounds. But the price that people should be paying attention to more so is this green line, which is the term price. And it's steadily been rising, right? It's up over $80 now, and it's actually surpassed the spot price. This is the really indicator of what's happening in the overall uranium market from supply and demand standpoint. And it's the one that you should really pay attention to. Equities do tend to chase the spot price, but it's this long-term price, which represents 80 to 90% of the overall market, is the one that you should be paying attention to. And it's been steadily climbing. And so everybody's asking, okay, what are the next upcoming catalysts? That's great. Uranium's started to run up. What can we expect that can really help, you know, keep pushing that price upwards? And the good thing about the spot price is, yes, it can fluctuate, but if that term price continues to climb up, the spot price will eventually have to catch up. Because if the spot price is low enough, a utility will just enter into that spot market and buy some physical uranium because it's cheaper than the contracts they're currently buying from. And so this is another thing I want to talk about here too, is just trying to tell you guys what's happening and how really the price of uranium can be driven up here, in the short term. And so this is the end user here. This is the nuclear power plants. So really what happens is, you produce the uranium out of a mine, it gets processed into something called yellow cake, and then it enters what is really a fuel cycle, which is 18 to 24 months. It has to be converted, and then it has to be enriched into that nuclear fuel, which could eventually be put into the nuclear power plant to provide that power. And what happens is, so the nuclear power plants, utilities are buying this enriched fuel, and it's really a trickle down effect of price increase. And it slowly, with it ends up being the mining company that sees that really physical uranium price going up last. And so what you've been seeing recently is the enrichment is up 200% over the past couple of years. Conversion costs are up 450%. And so that hasn't really been baked into the physical uranium price yet. It's started to move up, definitely. But what you're seeing is really massive increases in this part of the fuel cycle, and it hasn't trickled down to the physical uranium price yet. And so that's something to watch for. And it's as this continues to go up and provide pressure on this part will follow suit. It always does. This is how the fuel cycle works.
Hey Keith, while we're on this,
Yeah,
I believe there's an audio question, so I'm gonna
sure.
allow Selden to speak. Um, Selden, you just need to unmute your microphone. There you go. Can't hear your question if you're asking. Well, while we're waiting for Selden to potentially chime in with his audio question, there is another question that came in. So while we're on a break, do you think the data center projects fueled by nuclear energy being built by Google, Microsoft, and Amazon will move the needle for uranium?
You know what? That's almost like a cherry on top. The fundamentals of what's even just required for the nuclear power that exists right now, the supply can't meet it. It hasn't been able to meet it for the past few years. And so those current day fundamentals are what's really driving the price of uranium. Because, like I said, the next slide will show that we've had a huge supply and demand gap even for the past few years, and it continues to grow. So if that demand continues to come in even through these AI or through the data centers, then that could drive the price even higher. I view that as a cherry on top, but honestly, the fundamentals as they currently sit, there's not enough supply, and demand continues to grow.
Okay, great question. And Selden, since I don't think we can hear you, either type in your question or we'll try it again later in the presentation. But for now, Keith, I'll let you continue on.
Sounds good. And so this one really touches on the next elephant in the room, and that's the geopolitical tensions that are happening, and where the United States and the Western world is going to be able to supply their uranium from to fuel their nuclear power plants. And so this is on the left. You see the United States is the top consumer of uranium in the world, followed by China, France, etc. This is production side. You see Kazakhstan is the largest producer, followed by Canada. Um, and so what's happening is China's really cornered Kazakhstan and really did a lot of deals and investments and stuff that's made it so that even if Kazakhstan's able to increase production, that's going to China. And so now the United States and France and other groups are really looking to Canada to provide that next level of production. And something to look at here, this is the total, because this is even from a couple of years ago, this is total consumption versus production. You can see an 8,000 ton per annum gap. And so what's been happening is United States, China, countries like that have been tapping into strategic reserves to fuel this gap. They're kind of playing a bit of a long game in their mind where they think that they can continue to tap into their strategic reserves and wait out this bump in uranium price, and hopefully it comes back down. But what they didn't account for is the increased demand and really the shift in society in pushing towards nuclear power. And a lot of jurisdictions that weren't originally on this list are starting to add reactors, right? You have Philippines, Saudi Arabia, things like that. And so what's that doing? What that's doing is really making production that much more important. And we went through a 10-year bear market since Fukushima. No new projects came online of significance. All the people that were in the uranium space left the space because there weren't jobs. And so you see a lot of these producers in the US trying to get going, trying to get into production, and it's tough to staff it. A lot of the people that were around, to build these great mines in the past, are in their 70s now or 60s, and they're not looking to get back into the mining game for uranium. And so what you're seeing is kind of this perfect storm where demand continues to increase and production just can't keep up, and it won't be able to keep up for the foreseeable future. And adding in that geopolitical aspect, it really points to Canada as, having to be a leader from a production standpoint, to really help feed the United States, France, South Korea, Japan, other groups like that, even Canada itself. And so why is Canada important in that regard, and why do people keep coming to Canada? Because geologically, it has a place in northern Saskatchewan, province in Canada, called the Athabasca Basin, which is home to the highest grade and largest uranium mines in the world. It has this perfect geological setting where you can have the development of the most highest grade deposits of uranium in the world. Just for context, the average grade of a uranium deposit outside of the Athabasca Basin is 0.2% uranium. The average grade of the Hurricane deposit, which is up in here, the average grade is 34.5% uranium. That's average grade. This is some of the most valuable rock in the world, which is why you see companies from all over flock into this little area in northern Saskatchewan to look for, that next great deposit. And that's what our company's doing. But you see, Cigar Lake here, that's the largest uranium mine in the world. McArthur River, that's the second largest uranium mine. That's 18 million pounds a year, 15 to 18 million pounds a year. And you see all of our ground in this area that we've been able to acquire. And so that's why everybody's coming to this area. And that's why it's playing such a significant role, is because United States, France are some of the largest consumers of uranium in the world. And, they don't have the same geological setting. They can't provide their own uranium for what they need to consume. And so Canada is going to play a significant role in that, specifically the Athabasca Basin in northern Saskatchewan. So these are three companies. What do they have in common? All three of these companies operate in the Athabasca Basin in northern Saskatchewan. Another thing these three companies have in common with is that their valuations are underpinned by a discovery of uranium that they made, in the past 15 years in that area of the world. And, none of these companies are currently in production, but you can see the valuations of this. This is in Canadian, but it's, 5.6 billion, 530 million, $2.4 billion. So huge, huge valuations for companies that aren't even in production yet. It just goes to show how valuable that rock is. And that's why the market reflects that with their valuations. And something else these groups have in common with is that members of our team played a significant role in all of them during the discovery phase of their projects in the Athabasca Basin. And so that's why I touched on that we're a team that, this is a newer story, but we're a team that's had a lot of success in the Athabasca Basin making discoveries. And it really starts at the top with our chairman, Steve Blower. He's the VP of exploration of Denison Mines when they found the Griffin deposit and found Phoenix. Moved on, became the VP exploration of IsoEnergy when they made the Hurricane discovery. That's the highest grade indicated uranium resource in the world. Craig Perry, a founding director of NextGen, founding CEO of IsoEnergy. Myself, as it started off as a geologist, spent 9 years at Denison Mines, moved on and became corporate development for IsoEnergy. And then Andy Carmichael, part of the IsoEnergy discovery team. And so we've really had our fingerprints on a lot of the success in this part of the world over the past 15 years. And we're looking to do it again with Cosa Resources. When we were at ISO, we were at a similar valuation to what we are now in a worse uranium market. And we made a discovery and we went, from 30 cents up to $6.50 within 18 months, our share price. So it just goes to show what it is the discovery can do, even in a bad uranium market. And we're a group that's created value, even when we didn't have the tailwinds of uranium space behind us, because that just goes to show what can happen if you do make significant discoveries in this part of the world.
Hey, Keith, quick question on that, and this may be a little bit leading,
Yeah.
so apologize if it is, and if you can't answer it, that's fine. But when you think back to pre-discoveries in previous companies and what you have today and what you're doing, how do you compare what you see today with the excitement level of knowing what you found before?
Yeah, you know what, the good thing is you keep learning, and every time you're exposed to this level of success, you do get better at your job. And we're a group, like I said, that's been exposed to a lot of success and been in around a lot of success with these discoveries. And we've been strategic on the land that we've put together. And we wouldn't we wouldn't be going after this land that we have, like these projects, if we didn't think we had a good chance of making a discovery. And I'll talk about our formula in a little bit, but we've always taken that approach where you have to create all these great looking targets. And if they're not showing what you want, you have to be ready to move on. You can't be married to this one little area if your geological thesis doesn't match. And we've done that the whole time. We've remained agile. We've remained kind of nimble and ready to move on to different projects if we need to. And that's really led to a lot of success. And what we've done now is, even in a competitive uranium market, is piece together an absolutely terrific portfolio of projects that we're extremely excited by. And we know you got to drill. And that's what we'll be doing shortly, which I'll touch on.
Perfect. Thank you. I'll let you continue on.
Yeah, and so I'll emphasize Denison again here because, as Jim mentioned, we did just do a transformational transaction with them. And, it's really a product of us having a previous relationship with this group. Like I said, they're a $2.4 billion company. We're a $20 million company. So it's not very often you kind of get these strategic transactions with a group that size. And so what's happening is that Denison Mines, they are one of the best uranium development stories in the entire uranium space. They're working to build their Phoenix deposit and put it into a mine in the next couple of years. So they do have a strong treasury. They do have, over $100 million in working capital, over $240 million in physical uranium holdings. They're pioneering the ISR mining method into these high-grade uranium deposits in Canada. So they're a great partner to be part of, to be with. And the other thing I'll add to is that they have great projects that they're not going to get to during this cycle because they're focused on building their mine in that area. And so that led to us, seeing an opportunity. Like I said, we're a group that knew their projects. I worked there for 9 years and I knew their group well. And so it led to us completing this transaction. And from their standpoint, they see it as an opportunity to work with us, their group that we know, or a group that they know well. That's what we are. And, if we do have success and manage to make a discovery, they're going to be knocking on our door, right? They're riding passenger shotgun with us as we drive towards making this next discovery. And they're going to be looking for more uranium. The moment they get into production on their first project, they're going to be looking for that feed. And they know that. And so that's why it led to this really transformational transaction where we've acquired 70% interest in 3 projects from them. Denison now owns just under 20% of us. They're going to offer us corporate, technical, financial support, they've put their hand up to contribute a minimum of $1 million in future equity financings to maintain their 20%. And these are three projects that we identified as being highly prospective, ones that our team knows well, this area. And Murphy Lake North is within 4 kilometers of the Hurricane deposit. The Hurricane deposit was the one that our team found during our time at ISO Energy that sent our company from 30 cents up to $6.50, 20 million in value up to 300 million in value in a short period of time. And then the other project I'll touch on is Darby. It's within 10 kilometers of Cigar Lake Mine, which is the largest uranium mine in the world. They've appointed Jeff Smith, their VP Corp Dev, to our board. They brought in Chad Sorba as a technical advisor for COSA. Chad was part of two discoveries at Denison. So, it's really a coming together, really strategic alliance between us and Denison, which I think really separates us from our other peers, right? In junior mining, it's important to really show the market and validate what we're up to. And I think this really does. So these are projects, Denison joint ventures. They're in the dark green. Our other projects are in kind of this lighter green. I'll just touch on this area of the Athabasca Basin. This is just an overview map showing it. You'll see all the infrastructures in this area, all the mines, all the mills. And so it's a good area to be, but it's also extremely highly competitive. This whole swath in this area is controlled by the Camecos, the French government, the Denisons. And so it's really difficult to get good ground in this area. And so when we saw an opportunity with Denison, you obviously jumped at the opportunity. And you will see that, Murphy Lake North, it's right beside the Hurricane deposit, which our group found, obviously in 2018 during our time at ISO. And then Cigar Lake, Darby's right next to Cigar Lake, in amongst good infrastructure. It means it's cost-effective exploration. And the best, as simple as it sounds, the best place to look for uranium is next to uranium. You have these big string of pearls where you see these gray lines, these big, long, what we call uranium corridors, where you have a string of pearls from McArthur River, past Denison's Griffin Phoenix down to Key Lake. And so we said we got to get as much ground as we can within these areas to really set ourselves up best for discovery. So just zooming in a bit on Murphy Lake North, this is the project we got. This is ISO Energy's Hurricane deposit. Like I said, we're less than 4 kilometers from there. This is an area that ISO is extremely focused on. They've been drilling all over the place here. There's been what we call smoke everywhere. It's very shallow. It's just about 250 meters down to the target length. For reference, Cigar Lake, McArthur River, the two largest mines, they're about 400 meters down. So this is really shallow in this part of the world. And what you see is you've seen drill holes everywhere around here. And so this is really that last strip of this major trend that hasn't seen significant exploration because it was controlled by Denison and they're busy, working on their major project down south here. And so that's why it kind of sat dormant, even though there hasn't been a drill hole on it since 2005, despite the success that happened right next door in 2018. And what you also see here is that, this whole area is just juiced up, just loaded with uranium. There's been hits in the past by Cameco, 29% over 7 meters, 9.8% over 3.3 meters. Remember, for reference, that 0.2% is the global average grade of your uranium deposit. So these are massive high grade, and that just means there's a whole bunch of uranium fluid going through this entire area.
Hey, Keith,
And
question on that then. Should that not have been followed up more, I don't know, with more exploration as a result of those drill holes?
yeah, definitely. I
And
think
why perhaps wasn't it back then?
so specifically by Cameco, you know what, they had a thesis on how they thought that they could find that tier one size deposit. And so what happened during our time at ISO Energy was they drilled a hole just south of here. It hit interesting, what we like to call uranium indicators. The rock was destroyed. There was interesting chemistry in it. But they had a checklist of what they looked for and they moved on. And so when we bought it during our time at ISO, we paid, I think, $300,000 for it, Canadian. Moved the drill onto site, drilled the very first hole and hit the highest grade deposit in the history of the Athabasca Basin. And so I think people are learning more and more that just because you think you hit your target it doesn't necessarily mean it's true. And there's often parallel targets you could drill. And so that's what's happened, right? There's a lot of missed opportunities in these areas, and you start to track how other people have made discoveries, and often it is on a project that was held by a Cameco or one of these major companies. And they're busy. They had a lot of good ground. They're in it, drilling in and around Cigar Lake and mines like that. But still, like, these are missed opportunities. And, Denison knows that this still has potential, because it's important to remember too that they're maintaining 19.9% of us to have exposure to this. They're maintaining 30% interest in the project, that they'll plan on funding. And so, in their eyes, they're maintaining exposure if we do have that level of success, right? And so these aren't projects they're giving up on. But yeah, that is a good question, Chip. It's kind of how usually discoveries happen, right? It's an area that somebody else has given up on, didn't follow it up thoroughly enough, and that just provides more opportunity for us.
Right. Right. So benefit to you right now.
100%, right? And this, like I said, this is one of those last areas of this entire trend that hasn't seen significant drilling. And you're right next to the highest grade indicated uranium resource in the world. And so that's why we will be drilling here in February. That's why we closed the transaction with Denison a couple weeks ago, and we're moving as quickly as we can to get drilling in this area because we're extremely excited to be back almost in what you'd call our backyard, right? Our group knows this area better than anybody, based on the success we had just next door with our previous company.
Yep. Perfect. Thank you for that. I'll let you continue on.
Yeah, and this is just showing a little bit more scale. So this is an airborne photo. I want you to understand that these deposits are extremely concentrated, very high grade, but they are difficult to find and they have somewhat of a small footprint. And so this is the Hurricane deposit. For scale, this bar is 1 kilometer. So main part of it's like 100 meters long, 300 feet. And that packs enough value that the current valuation of the company is about $500 million. And so, we have this stretch here, which doesn't seem huge when you zoom out on a map, but what you realize is there's plenty of room left to fit something of similar size. You could see all these are all little drill pads. You could see there's been a significant amount of drilling in the area. And this is kind of one of the last untouched areas. And importantly, you also have this big, long parallel area that has seen one drill hole. And the one drill hole drilled here hit a little bit of uranium, which is a good sign that there was fluids passing through, yeah, the proper fluids passing through this area. And so honestly, to get an area where you have about 6 or 7 kilometers of this parallel trend next to some of the most highest grade uranium in the world, this is a huge opportunity for us, and it's very cost effective drilling. Let's briefly touch on this project too. This is right next to Cigar Lake Mine. Um, we really fought to get this one from Denison. It butts right up to Cameco's ground. It hasn't seen drilling since really 2010. And that was by, some of the guys that are on our current team during a company they worked at during the last uranium cycle. And they honestly said that they didn't know what they're doing. This is their first time exploring for uranium in this area. And so how they targeted is much different than how they would target now. And that kind of speaks to Jim's question that he asked there, is that we're constantly learning. We're constantly improving as we've had success along the way. And an exploration model that existed 10 years ago is much more improved now based on the success that we had at ISO, that we had at Denison, that Craig had at NextGen. And so we're much more educated on how we target these things. And what we realize is that none of these holes hit the optimal target that we're going for. And really all what these holes do is paint a picture of what's happening under the ground. And so it really leads us to have a whole bunch of area here to explore where nothing's been killed off, right next to the largest uranium mine in the world. And so that's why I'm painting a picture here that we really fought to get these projects. It's very competitive, very difficult to get projects in these areas, and so we're extremely excited, and we'll be drilling this one later in 2025.
Hey Keith, while you stop for a pause for
Yep.
a second, I had a question from Bill. Is there any radiation detected at surface, or are workers protected by the overlay? And then therefore you have to drill to actually find the deposit.
Yeah, they're undercover. There's nothing at surface. The ones that were at surface years and years ago were found, on the edge of the basin. So what happens is you have this big sedimentary basin So it's just sandstone above it. And then below it, you have these metamorphic rocks. That surface in between these metamorphic rocks and the sedimentary rocks is where these uranium deposits occur. And so it's totally undercover. And there's safety wise, I mean, something important to point out too is Saskatchewan's been mining uranium, for as long as you can, for 100 years almost, right? And so it's one of those areas, jurisdictions that not only allow uranium mining, the they actually embrace it. And so when you start looking at all the places you want to look in the world, it's amazing that, the highest grade best projects exist in such a great jurisdiction to operate in. And so there's plenty of safety protocols put in place. And, I think I spent a lot of time working in amongst these uranium projects when I was at Denison and ISO. And so there's lots of protocols in place to prevent anybody from, from a safety standpoint, being exposed. And you'd be surprised, you actually end up getting more radiation exposure if you fly a lot more, or if you lived in like a stone house or something like that. There's very limited amount that you get exposed to, especially once you step about a meter back for any of this high grade, your exposure goes way down.
Good question. Thank you for the answer, and I'll let you continue.
Yeah, for sure. So these are the projects we have that are all 100%. Like I said, they're huge amounts of land right along these interpreted uranium corridors. And just look at the context, right? This is Cigar Lake, this is McArthur River. Some of these projects we have would be the equivalent of mapping down from Cigar Lake past McArthur River. Like, it's very competitive area, and we've managed to piece together great projects. And so why does it matter, you say, having all these projects? Well, this is the orange. The orange shapes here are what all the projects that were owned by companies in January 2020. That's everybody. Cameco, Denison, everybody. This is January 2020. This is January 2024. 2020, 2024. And so the race is on. People are coming to these areas. Dozens of companies have kind of formed out of nowhere to try and get pieces of this area, and we're uniquely positioned in that we've managed to position ourselves, right next to amazing projects, amazing mines and deposits along these interpreted corridors. And I think that's a product of that. We have an entire team that's really been active in this area since 2007. We know what we're doing. We know what projects we're going after. And not all of these projects are created equal, right? There's a lot of companies that will come in here and really struggle because they've kind of formed overnight and they maybe access some capital. But Saskatchewan's amazing to operate in, but if you don't know what you're doing, it can burn you. And so that's why, I think we are uniquely positioned. We're extremely excited by the land package you put together. And now what you're seeing, since it's so competitive in this area, is that a lot of groups are starting to reach out to us to maybe form joint ventures on some of our projects, to potentially sell some of our projects. And as we continue to upgrade the projects we got, which we did, with this Denison transaction, we would look at some value creative opportunities, right? If we're not going to be able to work some of these projects, we'll do a deal with some of these companies, right? It's better off than just letting them kind of lapse, right? And so I think there's a lot of non-dilutive opportunities for us to bring in some cash or some value, during this cycle based on us, really somewhat being fortunate, but really getting ahead of the curve here in the projects we're able to piece together. So this kind of answered the question you guys were asking about it being undercover. I want you guys just to understand this. This is the sediment. This is looking underground. So this is what we call a cross section. And so, this is drilling down underground. And so this is the sedimentary rock. This is the metamorphic rock below. And what you have is the uranium sitting right at that surface, which we call an unconformity in between these two. And what happens is you have a whole bunch of fluid blasting through here. And so the uranium deposit itself is small, but the footprint of this fluid is much larger. And so what you start looking for are signs of these fluids, signs of what we call structures and alteration. So basically you'll be drilling through the sedimentary rock. It'll be nice and clean sandstone, then boom, it'll be obliterated. It'll be sand, it'll be clay. But sometimes you could chase false anomalies. And so with our group, we have seen hundreds of holes in and around deposits like these uranium deposits. And so we really have, I'd say, an advantage in the sense that we can tell, importantly, when we think we're getting close to something, but also importantly, when we think we're nowhere near something. Move on. Don't waste drill holes. As soon as you get into an area that doesn't look like it's going to yield, an economic size deposit. And so what's next? We're drilling. We're going to be drilling here in the next few weeks. The guys are up at site now. We're just waiting for about an extra inch of ice to cross this one lake with our drill, and then we will be drilling up out into this area. That's the beauty of Saskatchewan in a sense. There is a lot of lake coverage, not where we're drilling, but a lot of lake coverage in and around these areas. But in the wintertime, it freezes. You can drill on it. You can easily move equipment around, which leads to reduced drilling costs to access pretty much anywhere in amongst these areas. I'll just point out that these are all different drill holes that are done in the past, and a lot of them have that structure, that alteration. It looks like that those major fluids were going through there, and it's really pointing us to this part to drill. Maybe this is the alteration footprint, the structure, the destroyed sedimentary rock, and we're sitting next close to that deposit. And so we're fully funded for this drill program. Like I said, we will be drilling here in the next few weeks, which is the biggest catalyst for any company like ours.
Hey Keith, for that drill program, about how long will the drill program take? And then part two, how long after that do you expect to get results?
Yeah, so it'll take about 4 weeks. Should start here in mid-February, be done mid-March. And the good thing with uranium is that you can pretty much tell right away if you've had significant results based on you can put what we call a scintillometer. It's like a Geiger counter. You can put it right up to the rock, and if it's elevated, there's a good chance you've hit uranium. And we can release those results as counts per second. They're called scintillometer results. And so what you can do is provide an update to the market while you wait for assays. And so what we've seen in the past is that uranium companies can almost if they do have some success, they can get a double bump. They can get a bump in the sense that the market is extremely excited because they hit elevated radioactivity according to their scintillometer. And then once the assays come out, a month or two after that, and prove up the uranium, you'll see another re-rate of the stock. And so we can get results out, probably kind of in March-ish, and then assays, if required, would be, a month or two after that. So lots of steady news flow throughout the next, month or so.
Perfect. Thank you.
Yeah, and I just want to show the road, right? This is what it's like up there currently. It's snowy, it's cold, it's sunny, but I grew up in this part of the world, so it's an area that our group knows well, and we get excited to get the opportunity to get out into these areas and explore. Capital structure. So Denison Mines is our largest shareholder, just under 20%. Importantly, I'll point to this is that management advisors, basically our team's skin in the game. We have just over 18%. Funds and strategic investors, just over 24%. So that's long uranium funds that, we've made money in the past during our previous companies that don't usually support stories of our size, but, really backing us as we look to hopefully do a repeat of what we've done in the past. So just over 71 million shares outstanding. So, tightly held junior company, right? Where the float is just under 38%. And importantly, we're fully funded for this next program. The next program is going to cost, under $1 million Canadian to do this drill program, probably closer to 750,000. So we're fully funded for that, heading into this upcoming drill program.
Well, while you're on that question from Bill that came in, I think you talked about 1,600 meters of drilling.
Yeah.
How many drill holes does that represent?
So that is 4 drill holes. Our target depth is about 300 meters, but if you tilt the head and do a shallower canvassing of that sedimentary rock, um, and you could drill deeper below the target depth, it'll be about 400 meters each drill hole. So what happened is that Denison had the permit because this is their project, and we were able to transfer over the drill permit to us, but they'd only permitted 4 drill holes at this point. And so that's what we're going to be doing right now. It'll take us another month or two to get another permit. It's very easy in Saskatchewan. We know what we're doing. And so then if we want to head back there in the summer months, we can, but that's why we're limited to 4 holes during this first program. But, thankfully, like I said, we just acquired this project 2 weeks ago, and we're going to be drilling it in 2 more weeks. So it's a very quick turnaround to be drilling something within a month after acquiring it.
Absolutely. And then follow-up question for that was, at what point would you need to raise additional funds?
At some point this year, I think we're in good shape in the sense that Denison has put up their hand to really be our lead order. Coming in for their 19.9% of a financing. And so, I think you hope, you get some tailwinds in the space here, and it's going to be a very tightly held financing. We do need to do it. And I think the projects we acquired here are shallower from Denison. So that means it's more cost-effective exploration. We don't need huge amounts to really explore for this year and next year. And so, that's what excites us by this. And so we're in good shape in that way. And I think, like I said, having Denison there is a lead order, I think really separates us from our peers, for sure.
Great. No more questions
Okay, great.
currently.
Okay, sounds good. So I just wanted to provide this opportunity for you guys, opportunity slide for you guys. This chart on the right is what happened to us during our time at ISO Energy. We discovered the high grade domain of Hurricane on February 2020. We were at 40 cents. Then the next 18 months, we went up to $6.50. That was in a much worse uranium market. So it just goes to show the value that can be unlocked when you do have discovery success. And, that was obviously a fun time for us to be part of that. And we're looking to do that again with COSA. Then on the left here, what you have is all of the uranium companies that are in the Athabasca Basin, like I said, in Saskatchewan. This dark line, blue line, is the sub 30 million market cap explorers. And so everybody's asking themselves, have they missed this opportunity? The Denisons of the world, the Camecos of the world, groups like that reached all-time highs, next gen. And the reality is you haven't missed the opportunity. The explorers, that sub 30 million, have not seen the trickle down yet of the capital coming back into the space. And so the investment opportunities staring you right in the face here, where you have a company like COSA, where we haven't seen that massive amount of re-rate. So a little bit of run up in January, based on the spot price, but you haven't seen that really massive re-rate yet. And that's what happens in these uranium cycles. Obviously, the money goes into the producers first, then the developers, then eventually it comes down to the explorers. And often the explorers really outperform the rest of their peers over, a span of 18 months to 24 months when the capital starts trickling down. That's what happened during the previous uranium boom in 2004. And so I think we're uniquely positioned in the sense that we're kind of in this undervalued portion. We have that tight share structure, and this happens to be the last company we're a part of. We've managed to create value even when we didn't have tailwinds in the uranium space. So I think I'll just show a few more members of the team. I just want to reflect on. I'm obviously the one here talking to you, but we have a team that's been a part of a significant amount of discoveries, top to bottom, left to right, however you want to view it. It's a team that's extremely competitive, extremely passionate about making that next discovery. And, I've been fortunate to be a part of a lot of great teams. But I can honestly say this is the best version of it. We have a team that's really aligned, really working towards that goal, right? They continue to, I guess, surprise me with how well we're able to acquire ground, how well we're able to access and do cost-effective exploration, even in an inflationary environment. And so, I'm extremely excited by what we're doing, and we're really just getting going here. Inventa Capital. So COSA was incubated in Inventa Capital. It's really a place where you can incubate these natural resource companies. The most prominent one would be Visa Silver. They're developing their Panuco Silver project down in Mexico, about 800 million market cap. Heliostar also based in Mexico. So I think, that backstop really helps us in the sense that, we do have financial support when we do need to access capital just by really passing the hat around the office. And it's been really successful for us in the past. So I think, I'll just finish it off here by saying that when you look to invest in a junior uranium company, I think you go through a checklist of what you want to look for. One thing is obviously track record. We tick that box. We're a team that's really provided billions of dollars of value creation with discovery success over the past 15 years. And we're a team that can really rely on to do the right work. There's no guarantees in exploration, but I mean, we de-risk that as much as possible based on past success and what we're looking to do here. Again, access to capital. We are obviously backed by Inventa Capital. We're a group that's really put in a lot of money ourselves. And you know what? Our access to capital is significantly increased with our deal by Denison, right? Where Denison's put up their hand to help provide us some financial support here. And so I think our access to capital is very strong for a company our size. Skin in the game. I showed you we own 18% of the stock. We continue to buy on market. We continue to cut checks at every financing. So we are really, I guess, putting our money where our mouth is and supporting this story and buying in because it's still early days and we think there's a lot of value to be had here. And then finally, targets and upcoming catalysts. I've shown you we have projects right next to world-class uranium mines and uranium deposits. And importantly, we're going to be drilling here in the next few weeks, which is the biggest catalyst for a company like us. And that the drill bit is what really offers that potential value creation. And so we're going to be drilling here, like I said, shortly next to a deposit that our team found in 2018 during a previous company.
Excellent, Keith. Thank you for that. Couple of questions are in here. So one, which is one of the questions I like to ask towards the end, what are the biggest risks to the success of your projects?
Biggest risks to success are um, you could have a really good geological thesis and it might not be there. That's the biggest risk to exploration. And how we offset that is we've always taken that approach that we don't get married to the one project. Like I'm talking to you about Murphy Lake North right now, which is right next to Hurricane. If it's not showing what we want, we have a whole pipeline ready to continue to explore at. You have to move on from an area if it's not showing what we want and it's not going to lead to that potential great discovery. And so that always remains a risk in exploration. And that's also the fun part of it, right? It is treasure hunting. And our team's good at it. And so we've always taken that approach where we are ready to move on to a different project. And that's why we maintain that pipeline of great targets that are drill ready and ready to explore. And so we can move if we need to until we ultimately make that discovery.
Thank you for that. And then next question, do you think the drill program starting next month could provide a re-rating in the stock, or do you think more would be required?
You know what? You never know. I've been a part of when I was at Denison, right? It took a few years for the group to make that Phoenix discovery. So a few drill programs where they ultimately made the Phoenix discovery, which backstops their current value of 2.4 billion. When I was at ISO, we acquired that project off Cameco and discovered the Hurricane with the very first drill hole. So I've been a part of kind of different discovery pathways. So it's always difficult to tell. I think you got to start looking for signs when we release our results. If we start talking about big alteration or big structure, then maybe we didn't find it this first program, but these are all key indicators pointing that we might get it next time. So that's the beauty of exploration is that it could be the very first drill hole that you do make that significant discovery. And I've been a part of that, fortunately. But it was also, our seventh project where we did that. So it's very difficult to predict. What I can say is that we have what we call discovery ready or drill ready targets. We have great looking targets. We're going to go be drilling here, and it is possible that we do have a terrific outcome, in this upcoming drill program. But it's always difficult to tell, right? That's what I said. That's always the biggest risk with exploration is that even if you have a very strong hypothesis, it might not be there. But how you offset that is having, multiple targets that really meet your criteria.
And then, in addition to the 1,600 meters planned right now, how many additional meters do you think you might do in 2025?
Yeah,
Either
so we're
either at this project or at Darby.
yeah, so Darby, probably a little too early to give you exact meter amount, but we'll go there and we're kind of looking to do that, 5 to 10 drill holes in the summer. If we have good success at Murphy Lake, we might try and get back there in the summer too. And so, lots of opportunity, but this is, very cost effective exploration. Anytime we enter Murphy, it's going to be less than $1 million program to significantly advance it.
And as you look forward, what are you most excited about for 2025?
Really, honestly, I think, we built this company is really 2023 where this became a uranium company. And we put our heads down for a year building out the assets, our 100% owned assets. In 2024, we really had to do a lot of geophysics, really generate a lot of targets. We managed to drill a little bit in 2024 and have some success, but now we've upgraded majority of our projects. We've acquired these ones from Denison, which are drill ready. And so the wait is over. No longer are we going to have to spend, capital on generating drill targets. We have them. and everything's drill ready. So this year and the next few years are just drilling, 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 and that's our biggest catalyst. That's what I'm most excited about.
Well, it's not too far away. It sounded like next month, but now next month is 2 days away, so ready to get started. Let me say today's keyword. I like the concept of, it's all about drilling. So let's stay with drilling as our keyword for today. And let me thank the attendees. I don't see any additional questions currently out there. So thank them for joining us today and for the questions. Thank Keith for sharing his story and excitement about the company and its opportunities going forward. And before we part ways, Keith, I would turn it back to you for elevator pitch closing thoughts.
So the tailwinds of uranium space are just getting started here. We're a company that's really backstopped by Denison Mines now. We're a group that's made multiple discoveries in the past, and we're looking to do it again, drilling on a project right next to a deposit that we found during our previous company in 2018. So we're drilling within the next few weeks, and that's the most exciting thing a company like us can be doing.
And as those results become available, we'll make sure to share that with everybody on today's call. Stay tuned. Lots of exciting times ahead. Thank you, Keith.
Thanks, Jim.
Have a great rest of the week.
Thanks, everybody.